Welcome to this January 12th report of the USDA. I usually refer to it as the Super Bowl of all reports. Reason being is there's about 3 different reports all combined into one report, which basically creates a lot of information and obviously gives the trader a lot of time to adjust their positions. So the report basically covered world ending stocks, supply and demand, both for the world and the U.S. U.S. quarterly stocks, that basically says what the export rate has been since the last report, which was December 9th, I believe, or somewhere around that time frame. The final crop production for the U.S., again, this is never really final because somehow they seem to adjust stuff as they see fit throughout this next coming year. But basically, very similar to like our StatsCan report in December for Canada, where they have the actual yields for soybeans and corn. And lastly, it covers the winter wheat seeded acres, and you'll see why that is important. Okay, before we get into the report, I did post the report online. I'm going to go to that last and really dive into the numbers from there, give you an overview. You can watch it on your own time. Otherwise, these webinars can get turned into an hour-long situation. What this slide is showing is basically this time frame right here between 2006 2007. That's when the U.S. government ruled how much traders can hold in their positions, basically affecting how actively they can trade in grain commodities. Previous to this line, obviously you see after this report, you know, maybe 8 to 9 cents down. 2004 it was 18 cents higher. But since the report, it's gone limit every time. And this morning, corn's down limit, which is 40 cents. So that's why I've got this bar in here. Whether it holds today or not, that's still to be seen. But what this shows us is in these 2 years here is the limit was only 20 cents. So it traded limit up in 7, 8. And in 9, 10, it traded limit down when trading was expanded to 30 cents. And then you saw last year it went limit up. So again, why that's important is basically it shows us what the that the trade is very aggressive after this report. Now either they're funneling into their positions before the report or getting back into position after the report. As you see, last year they were buying back their positions. This year they're selling off their positions, which is what I've been talking about since mid-December. I really felt they were just evening up their balance sheet, and this report would likely make it go down. It looks like corn's going to be still holding good support lines at around the $6.10 level, $6 level a bushel. So now we get into the real boring part for most of you. We get into we get into the actual numbers of the report. I've highlighted a few things already. What this basically says is ending stocks for the U.S. for corn increased slightly, but basically what this shows us for their domestic use is they're using a little bit less. So that these two numbers combined is basically showing us that the U.S. in their corn situation is not comfortable, but not as bad off as what traders had thought. When we get into the world part of this this report, you see Argentina was already dropped down to 26 million metric ton from the previous report in December, where it was saying 29. This is important because corn, as I've been stating before in previous videos, that corn is the most affected at this time of year, hence with the heat waves going through there. and it's more it's more Argentina and South America than it is Brazil. As we see, Brazil's numbers actually stayed the same. So from what I'm reading, is this number still isn't set in stone. This could drop down to 24.5 yet, which will definitely affect soybeans. And when I get into the futures at the end of the webinar, I'll show you really that beans are just down simply because traders are selling corn. In this next slide here, basically it's the same slide. It's the world soybean supply and demand. We see here that from the December report, January projected world supply and demand basically is a little bit less than the December report. Since there's been strong exports into China, that's definitely brought the numbers down. And again, that's why beans are probably more neutral today, even though they're down 30 to 35 cents. That's going to be the market that will likely pop up once they get back into it. Again, there's if we look at Argentina, I didn't highlight it here, but their soybean production dropped 1.5 million metric ton. The corn yields are more affected with heat at this time of the year, but if heat were to persist into the end of January, first half of February, that's where you'll see their soybean yields start to be compromised. And another interesting note that's being supportive for beans and will likely in the future is Brazil dropped. So obviously there's been damage to some of the crops there from what everybody thought was going to be happening earlier on. In this slide, this is basically the global ending stocks to use. The reason that's important is basically if a meteor were to strike, how much grain, how many days of food would we be able to have in the world if there was no more produced? And why this is important is it comes down to how much grain there is in the world, and of course with the world populations, like I was writing about in December, how that affects everything in the market. We'll go from worst to best. This green line right here is wheat, and as you see, wheat's almost starting another uptick. It puts us well over the 30% rate, which means there's basically from 2007, 2008, where you saw wheat go into the $10 to $12 range in Minneapolis. We've basically gone up 50%, another 10% into this range, which I've always stated before, that wheat is the easiest crop to grow in the world because pretty much any country can grow it. The poorer countries in the world seem to buy the poor quality wheat, so basically when countries like Ukraine and Russia are back into the market and producing lots, that's where we can see the wheat number go up. The next number is soybeans. Why this number is important is you see there's less than last year. We're just dipped under the 25%, but it's really a comfortable number. It's not as low as back in 2008. But really, if you were to look, if I was to put a chart up here, basically looking at the tons produced in the world compared to back in these days, in 14 years ago, 15 years ago, we are producing way more, but our stocks to use ratio isn't going up accordingly. Obviously because of the population, because poor countries are getting richer and they want better quality food. And that's really reflected in the corn market. This blue line is a corn. World stocks to use ratio is just under 15%. Basically, there's only 54 days of supply in the world right now. That's why any weather market makes the traders very jitterish. If you were to, I don't have the U.S. slide, but the U.S. stocks to use ratio is actually down to 6.8. So basically, the U.S. is the country hurting the most for stocks to use ratio to corn. Of course, that comes down to ethanol policies and other government regulations that have come into effect. That's it for that part of the presentation. I believe, let's just see here. Yeah. Now I'm going to get into the actual USDA report, and you can find it when you log in. I've got it front and center under the good reads. A couple other things I've added here today is differences between AWB and CWB, glyphosate resistant weeds. Viterra predicts $50 million increase to their bottom line now that the wheat board isn't around. Big surprise. So if you click on here, you won't find a link for a video because obviously I'm going over it with this presentation. It's pretty much straightforward if you're a numbers person. This is, of course, diving into more of the USDA situation. And what we see here is corn production last year was 12.4. This year now they're saying what should be the final production is 12.3. So yes, it dropped. But when you consider that the average yield per acre dropped 5 bushels, really it's holding its own. Makes me really think of this: if the U.S. would have held, instead of 147 bushels an acre, would have held 152 with the amount of acres in the ground, what kind of markets we'd be looking at today. And that's something we really have to consider going forward, because the U.S. farmer is talking about planting an extra 2 to 3 million acres of corn. The soybean number you see, that's again why beans are supportive right now, is the soybean number dropped from last year. This has to do with, again, lower yields, but moreover, probably 2 million less acres. Their yields were a little bit lower than normal. I'm not going to talk much about, I'm not going to talk at all about sorghum. And when we get down here into the winter wheat acreage, the reason this is important is last year they had 40.7 million acres growing over the winter time. Then, of course, the drought hit in Texas, Oklahoma, Kansas, and that substantially dropped their wheat yields and actually helped support the price for wheat. This year, they had just under 42 million acres planted. Now, the reason this number is important, you might think, well, why are we talking about winter wheat in the middle of winter unless it's freezing? It's not freezing, because even though it's bare ground and not very much snow cover, the temperatures haven't been cold enough. They've been actually warm enough and then cold enough to cause any kind of freezing. But the reason this number is important is basically every acre that increased. Sorry, let me just grab my pen. Every acre from here that increased into here is 1 less acre that can go into corn and beans this spring. So the real battle for acres, I feel, is going to happen in the next 6 to 8 weeks. USDA seeding intentions are out March 31st. But again, the reason this number is important is, had this come in under, say, what the trade thought of 41 million, that would mean that basically there was more acres that could go into these other 2 more profitable crops. Same thing when I sit down at your table and we talk about, which crop is more profitable. That's why I'm really recommending malt barley over wheat this year. I really see wheat being a dead dog, and honestly, with the CWB out of the picture, there will be some opportunities, but with us growing anywhere from 3s to low protein 2s, we may be better off just growing a malt barley, and I'll go into that in the next few webinars and talk about it, life after the wheat board, stuff like that. So again, we see that there was some hard red winter wheat planted, and those acres are up as well, substantially up. But the majority is, it doesn't matter whether it's hard, soft, or white. Basically, the acres are up in the winter wheat, and there will be less acres that can be available for the other crops. In this slide here, basically, we're looking at the world ending stocks. Here was the U.S. corn stocks last year, 1.1. This year it's projected USDA figures 0.84. Of course, this number changes from now through till basically our carryout, which will be August, September. So there's many more reports that can adjust this number, and that's where the reports will get bullish. I really feel with beans dropping 40 cents today, likely another drop of 15 to 20 cents tomorrow, that'll encourage China to be coming in and buying more, which will be supportive, and we could see this actual U.S. ending stocks with the euro going higher now. We could see this number dip down even lower. And again, that's where I'm deriving their stocks to use ratio of 6.8%, which is the lowest since 1995, second lowest in history that the U.S. has had for corn stocks. So, yeah, today looks ugly, but the future, if one was to be bullish on anything, it would likely be corn, especially if we get a wet spring, which generally happens where the corn acres are in Iowa and Nebraska, and if we get a wet year in there, their acres will be compromised as well. We see beans actually, you know, that's where I was saying there's positive numbers, negative numbers in all these reports. We actually have more beans produced than last year, but again, with the world supply diminishing with their heat waves in South America, that's what's creating, you know, more of a buzz around beans right now. And underneath here, the world ending stocks, of course, it's just an extrapolation over the U.S. Traders are really concerned about the U.S. most of the times. And we have, sorry, under corn, we actually have corn going up from last year. That's basically because they're projecting that corn in South America will still be higher because of the amount of acres seeded for what they produced. But you see, again, like I said, positive and negative numbers for each commodity. We have the soybeans from last year actually dropping 5 million metric tons in the January report. And you know, that again is creating some supportive numbers for soybeans. The reason soybeans are important to Canadian farmers, of course, is because canola is right now is just following the soybean numbers. And lastly, we have the wheat, which wheat grew basically 11 million metric ton. You even say 10, it doesn't much matter. This is the second highest number in history of keeping records as to how much wheat the world has on hand. So again, why go back to the wheat markets and why we should likely stay out of them for the next year at least. Well, and lastly, we have basically the world endings, or the world production. And of course, this is just a forecast for many countries right now, but these forecasts will be reality within the next 12 weeks. We see, again, some of those numbers I had before is we see soybeans dropping in Brazil. We see Argentinian soybeans dropping. Corn stayed the same in Argentina, but we see this number right here dropping in Argentine corn. So biggest thing to realize is basically these numbers right here are going to change. Any more heat waves in the next 4 to 6 weeks, that'll compromise the soybean yield potential, and the corn likely will not go up from here. It'll only go down. Like I said, a few people in the trade have said that there's my attempt at a down arrow. A few people in the trade have said this number will be 24.5 by the time all the dust settles. Now, one thing we have to keep in mind is it's still higher than this number right here as to what was produced last year. Again, it comes to with the amount of acres that were put in the ground. This number here for what was produced is lower than this number. So, I mean, the world ending stocks, that's why you don't see too much of a change in corn, but basically in the beans, this is where you see a lot of the changes, is they will be producing potentially less, and the U.S. With China's demand picking up will be exporting more. And I couldn't get it all on that slide, but we have Australia and Canada wheat. Again, after looking at some of those big numbers, you see how small our numbers actually are. Nothing changed here. Australia's production is right on pace for what the trade figures. Underneath here is just some commentary from the USDA, so if you want to read it at your own leisure, you can go ahead. Last thing I'm going to talk about is basically what the futures market has been doing this morning. I didn't put it out on my morning text because I put the text out too early before the calls were out as to what things were going to do up and down. This morning, sorry, that's the wrong one. This morning, beans were called 60 to 70 lower first thing. As we see, 25 is where they're at right now. They did hit 50 lower, so it was 50 lower at one point. But again, after showing you those numbers, and it's always a knee-jerk reaction, the first 45 minutes of trade are horrible after these reports. I never trust it when the market's going up, and I never trust it when the market's going down, because nobody's really looked at the reports. I mean, it took me a good hour and a half after the report came out at 6:30 this morning to really understand where we may be going. Again, corn was called limit down, and we see it open limit down and stayed limit down. We do see that May corn has actually come off its limit of 40 cents slightly, but any movement is good, however, because I really feel this number here is a real buying point. Anything down around $6 is a real buying point for China or the commercial trade to come in and buy. We see Kansas City wheat. Of course, this is affected by the winter wheat acres that were in the ground. We see that coming up, that going down because the winter wheat acres are higher. And then we see the soft wheat acres lower as well. But these two numbers were called 70 cents down first thing in the morning. So we see they're only at half. Interesting point with canola is we see canola actually was down $16 a ton. Now it's down $5 a ton. So just like I said, it's going to be a knee-jerk reaction with beans. We got another 2.5 hours of trade left. I wouldn't be surprised if this number comes back somewhere about minus 20 to minus 30. How does that sound? But basically, it's unknown. I think it's probably going to close about minus 30 down, and that probably might push canola into minus 6 down. But again, there's strong demand for the canola, and any of these opportunities where it dips down, I guarantee a Viterra is in hedging, buying grain as much as possible, buying futures contracts when the low was down first thing this morning in this level here, because they've been one of the main exporters selling to China right now, and they're creating a little bit of buoyancy in the trade right now because they don't want to push the futures too low, because then no farmer is going to sell. So, we're going to see this come back. Hopefully it can close even over the 520, which is kind of my short-term support line. Long-term is, of course, $500 futures, but short-term is this 520. If that happens, could actually see some bounce back in the market tomorrow. We aren't out of the weather yet with our Argentine weather. They have had rain over the last couple days. But again, I would point to beans here being yesterday. It's basically a 30-cent weather premium market, and they've pulled that out. So 30 cents can go back into that market very easily. The high resistance line is 525. We've broken that twice in 1 week. And the support line is 1175 for short term. So long term is 1080, which hopefully we never see that. But basically that's kind of what we're looking at for the numbers right now. And again, let me just clean this up. Like I said, you can dive into the report and look at it anymore if you want. If you want watch this video again, it'll be online probably this afternoon sometime, just under here, webinars. I always leave this daily one up as the top one, but it'll be underneath here. The last thing I want to talk about is the upcoming webinars. Christmas kind of messed me up for time frames and putting stuff together, and quite honestly there wasn't that much news over Christmas, so lesson learned. I'll probably start a little bit earlier next week, but I do have plans for the next 4 webinars. There's going to be, including this one, there's going to be 3 in the next 13 days to get back on track. Next Wednesday I'm hosting the Life After the Wheat Board. This is the one everybody's been waiting for. What I think is going to happen, opportunities that will be out there, and hopefully people have questions, because I know when I sit at your tables, there's a gazillion questions. So I'm hoping that it'll be one of those webinars where I can just talk about whatever questions people have. I'm going to have a short little presentation put together, but anyways, that'll be in January. January 25th is going to be very interesting. It's I call her my cell phone consultant. She has her own business out of Cochrane, but she saved me $1,500 over 2 years with one cell phone. Some of you who are running 3-4 cell phones under your corporation, I know she can save you money. She only takes the money on the first year of savings, basically 40%. It'll work out. If she saves you $1,000 a year on your contract, you'll owe her $400. Now, if that's over 3 years, she saved you $3,000 for $400. Makes sense. I've been kind of wanting to do this for a little bit because I've used her for 2 years now, and everything she's told me has happened. So I really like her, and she's going to do a short little presentation, and hopefully some of you guys will tune in and contact her and can save you some money that way. February 8th, hopefully I'll be done meeting with everybody in my group. I've only got about four of you left. If you're on this webinar, you know who you are. So we do need to get together, and this is the one where I use the how the acres are changing within my group, and kind of determine where that's going to sit kind of across Western Canada, which is going to be very difficult to actually predict because there's no wheat board around starting August 1st. So February 22nd webinar, my plan is to, it's to be determined, but I'm likely going to do barley versus wheat using your cost of production, because it's very interesting using those numbers, and everybody thinks the reason I'm hosting this after the Life After the Wheat Board webinar is to get guys thinking about more how much money you're making per acre than how many bushels you're growing, what is your likelihood of this, what your neighbors are doing, what the guys in the coffee shop are saying, what the grain companies are telling you, blah, 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 blah. So that'll probably be a nice little short one, but using my database, I've got some pretty neat stuff I can do on there and actually show you what we should be doing for barley versus wheat. And that's an important time frame because we'd be looking at, again, we'd be looking at, maybe some last-minute acreage changes. So does anybody have a question at all? Or I'm not sure. It's showing that some of you have microphones, so if your mic is turned up and you can talk it, well, I'll answer it if you can ask your question, or you can type it in on the bottom of the chat box. While I'm waiting for you, I'm just going to check my text here to see if anybody texted a question. Oh, yeah, well, here's a question. You say that the markets will be down in the short term. How long does short term last? Short term in these kind of markets can last one day. Really, I feel it's going to be probably more around the 1 to 2 week range, depending on South American weather. If it turns hot again in South America, this report will pretty much go bye-bye, and they'll be buying back into market heavy. But I really feel getting back into the futures part of the market, anything 530 to 535 is going to be very tough to break. You see we're trading at 520. We've hit 530 5 times in the last 2 weeks. We've never hit 535 once. So again, that comes down to what really is going to happen in South America. If South America weather, they get a little bit of rain, it stays the same, we could see this trend last right up until basically that March report where the seeded acres come out, or anticipation thereof the seeded acres coming out in the March report. So yes, I mean, short term can be, you know, it's all in the eye of the beholder, basically, what short term might be. But basically, I wouldn't put it out more than 2 months. Long term, when I look at fundamentals, that's where I look out about 6 months. Use a monthly charts, which on some of you have seen on my charts of the week. So hope that answers your question. It's pretty much that it's very difficult for a guy like me, or anybody, I don't care who they are, how smart they are, how much knowledge they are, that tell you that on January 24th, canola is going to be at its high for the year. That'll never happen. It's basically knowing the trends, understanding the trends, and putting them, you know, into everyday use for what fits for us in our groups. So, you know, you'll never hear me say, just like some of you that were quizzing me on this USDA report, was it going to be bullish, bearish, neutral? I'll never predict a USDA report. I would have thought it would have been more bullish, so that's why I don't put predictions out. You can't predict with the USDA. All you can do is analyze after it comes out, because their reports can be skewed at the best of times. So if there's no more questions, like I said, that it'll be available online. You can watch this video again if you want. Probably a very good video if you have children that won't sleep at night. Just plop them in front of the computer and I'm sure they'll fall asleep. So thanks for joining, and we'll see you next Wednesday on my Life After the Wheat Board webinar.